business correspondent, rather, Archana Shukla, is joining me now from Mumbai. Archana, great to see you. Why has the central bank done this, and what are the risks?
Banks have seen a sharp rise in unsecured loans. These are your personal loans, costlier consumer goods loans, or those taken on credit cards. At a time when household savings, personal investments, bank deposits have actually been at multi-year lows. In fact, for these unsecured loan category, the rise has been 23% over the last year, which is twice as fast as the overall bank credit growth in the country. Last month, RBI had said that they are keeping an eye and closely monitoring some fast-growing personal loan segments for early signs of stress, especially the smaller loan segment under $500 where the risk of defaults are higher. So now RBI has asked banks and financial institutions to keep a higher capital buffer for every personal loan that they will give out. Now, that means if banks decide to pass on that capital cost, these personal loans will become costlier. They'll not be as easy to get, and it would curb the growth. Housing loans, vehicle loans, education loans, and those taken against gold and gold jewelry, however, have been excluded.
Archana, I mean, is this about protecting people, or is it about the state of the Indian economy?
Well, it's both, because the entire Indian economic growth story at the moment is driven by the domestic consumption. We've seen from S&P Global to Morgan Stanley to the World Bank all say that India will be, despite slowing growth, will be the fastest among the world geographies, and the resilience comes from the domestic consumption story. We've seen that despite higher inflation, there has been higher spending. People are buying more consumer goods. People are traveling more. Apples of the world want to come and set up shop here, looking at the aspirational middle class that wants to spend. A large part of this spending is coming through these unsecured loans, these personal loans, consumer goods loans, which are normally taken by young professionals, those on lower salary scales from low and middle income families. Early data shows that missed EMIs and some defaults on credit cards has been on the rise, and that could shake the ground of the economic growth of the country going forward. And this is exactly the risk that RBI intends to stem early on.
Archana Shukla.